We had a second straight day of volatile price action here after the Federal Reserve meeting yesterday, and we also received some economic news here this morning that suggested that jobless claims did rise for the first time in 7 weeks here today. That caused a lot of different reverberations throughout the markets. Of particular note was the US dollar, which surged for the second straight day. That put pressure on commodities and other cyclical areas of the market. We did see interest rates slip, and that helped support utilities and REITs and even technology stocks. So we'll talk a little bit about all of that. We'll also take a look at the small cap index. Small cap has been down for 4 straight days, and it might very well bail out our bearish small cap trade that I have expiring tomorrow. So we'll talk about some of those trades that we've got expiring tomorrow as well. And then at the end of the session here today, we'll take a look at a new trade application example where I focus on a short-term bounce setup, so a swing trading bounce setup off of a smaller company that some of you might not be as familiar with. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's June 17th, 2021. First of all, if you're new, make sure you go over to YouTube, click subscribe on our channel, then go down below into our description area and make sure you're signed up for our email distribution list, and that way you can be notified whenever these videos get posted. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZ. I'd appreciate those of you that click like and retweet on our Market Outlook related tweets. And then last but not least, we have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And despite how volatile today's trading felt, we actually closed pretty much flat on the S&P 500. We were down 0.04 at the end of the day. But remember, one way to judge whether we had volatile trading or not is to look at the color of this label here that says daily range. And if that color is orange, like it is in all 4 of our charts cases here, it tells us that the daily range was in excess of what the average true range is. In other words, there was more trading activity from high to low on today's candle than there are typically in the recent trading sessions. And so despite the S&P 500 effectively closing flat from high to low here today, we had slightly more activity than we would have on a normal day. And so, that kind of follows up yesterday's sell-off as well. Now, the good news is this. There was a lot more selling early on in the session here today, and we were able to rebound and basically get back to the break-even mark there on the S&P 500. And remember, we remain above a rising moving average there in addition to having a strongly bullish posture. So while the last 3 days maybe have felt a little bit uncomfortable for you, you have to just remember where we've come from. And this is what the 3 days looks like right here on the S&P 500. If you take a more laid-back approach to things, you'll understand that markets need to inhale and exhale, and this is just par for the course. There hasn't been any sort of a major movement here, even though it's felt like a little bit of a shake-up here recently. So we retain our strongly bullish posture on the S&P 500. The Dow Jones is where we've got a little bit more worries here all of a sudden. The Dow Jones actually had something fairly important happen to it today. It was down pretty significantly, so you'll notice that the Dow was down about 200 points, and it was good for about a 0.62% drop. And this is the 4th straight day of downward pressure on the Dow. It's been a little bit more aggressive there because that's a more cyclical type of index that you're watching there. With the dollar going up, that's kind of hurt the Dow Jones a bit more than some of the other areas. Remember that the Dow Jones is more international in its scope with the big blue chip companies like your Coca-Colas and Procter & Gamble's and those types of companies. And so when the dollar rises, it doesn't necessarily benefit the Dow Jones Industrial Average the way that it might benefit some of the other areas. It's not to say the other areas have done well, it's just that that is another fly in the ointment for the Dow Jones Industrial Average in addition to everything else that might be working against it at that particular time. Well, the reason that today was worth mentioning is you can see 2 different changes on the chart all of a sudden here. You can see the background color of the chart has moved from light pink to dark pink. And what that represents is a shift from a weakly bearish posture to now a strongly bearish posture. And that happened because this green line, the intermediate line on the market forecast that you can find over on the Thinkorswim platform, which is a TD Ameritrade resource, you can see that green line has slipped now below the 50th percentile. Remember, these labels that we supply, those of you that are premium members with, will give you a heads up as to where it's at, so that way you don't have to squint to see where it's at any given moment in time. So right here, you can see in the green label it says it's at 45 and falling, so that's clearly below 50. And so that transitions us into a strongly bearish posture. And in addition to that, you can see that the movement this week has been aggressive enough to the downside where the moving average has actually changed to red all of a sudden here as well. Remember what that represents. It represents price not just being below the moving average like it was yesterday, but it represents now price is below a falling moving average. Yesterday the moving average was still rising, but today was enough of a pullback where you're actually starting to pull the moving averages down along with this more bearish trading activity that's taken place within the Dow here more recently. So it's a little bit peculiar knowing that the Dow has a strongly bearish posture, whereas all of the other three indices still have a strongly bullish posture. Usually the Dow is not one that has extreme movements to the upside or to the downside because it is more blue chip in nature. Remember, it's a little bit of a peculiar index in that it's only got 30 stocks in it, and it is price weighted as opposed to market cap weighted. So it makes it a little bit different than some of the other indices, but generally you're not seeing extreme movements to the upside or the downside. But right now you could definitely make the case that the Dow Jones is going one direction and the other indices are going another. So we'll see how that ends up resolving itself. But a lot of it, I think, is going to come down to what's going to happen with the U.S. dollar. If you expect the U.S. dollar to continue to strengthen, then I don't think that bodes very well for the Dow Jones Industrial Average. Part of it is an interest rate sensitivity story there as well. Remember, you've got some big companies like JP Morgan that would be part of the Dow Jones, and they're not necessarily going to thrive when interest rates fall as they did here today. So the banks had some pretty big movements today, and that might be negatively impacting the Dow. Remember, Goldman Sachs isn't usually thought of as a big bank the way that JP Morgan is, but that's another area that would get hurt if interest rates did fall into the future. The NASDAQ was our champ here today. It was up 0.87%. Now, oddly enough, it still has not broken out to all-time highs. We've talked about this in the last few sessions where the Qs, so QQQ, is up at all-time highs. But remember, the Qs are going to be just a portion of the NASDAQ composite. The Qs are basically tracking the 100 largest non-financial companies on the NASDAQ composite. So if we were to, pull up the Qs kind of side by side here, you can see the Qs hit another all-time high here today. You can see that high label over today's candle, whereas its cousin, the NASDAQ Composite Index itself, still isn't quite to where it was over there. Now remember what I mentioned a moment ago about JP Morgan and Goldman Sachs suffering today as a result of interest rates falling, and then also note what I mentioned about QQQ being the 100 largest non-financial companies on the NASDAQ composite. So on the whole, that benefits them. So notice that the Qs were up 1.27% today, which is quite a bit more than the 0.87% of the NASDAQ composite itself. So I think you do have some of the bigger, financial companies putting a little bit more pressure on the NASDAQ composite, whereas you're not getting that out of the Qs necessarily there. So that's kind of an interesting thing that's kind of developed here recently as well. But it is true that with or without the financial exposure, the NASDAQ composite did do the best out of these four major U.S. equity indices here today, up 0.87% and on the cusp of hitting a new all-time high. As mentioned before, it does have a strongly bullish posture. You can also see that the moving average color is green. Remember, that's a 30-day moving average. Basically means that price is above a rising moving average in that case. And then let's talk about the Russell 2000 here. Russell 2000 was the big loser today. It was down 1.18%. This was actually the 4th straight down day for it, so it's similar to the Dow Jones in that respect. It did finish well off the lows, so it was interesting to see it kind of catch a bid right around its rising 30-day moving average. You can see that long lower shadow basically comes right down and pretty much touches the 30-day moving average and then bounces to end the day. So, you know, those of you that aren't as familiar with candlesticks, basically that long lower shadow will tell you where it's traded throughout the day, but it didn't close at the lows. It closed up here a little bit higher than the lows. So, you know, maybe a little bit of bullishness you can take away from that. What we do know is that the posture, so the intermediate posture, is still considered to be strongly bullish. Now, it's starting to become a little bit more precarious here. You'll notice that the intermediate line is at 84 and falling. Anything above 80 we consider to be strongly bullish. So if this were to fall from 84 down to 79, it would all of a sudden have a light pink background color. So that could happen possibly tomorrow. Remember, tomorrow is a triple, if not quadruple witching day. So we've got a lot of futures and options and other things expiring tomorrow. That can increase the possibility of volatility. So anything is possible here. But right now it's looking like, unless it's a really aggressive day to the downside, you're probably going to be able to keep your bullish posture on the Russell 2000 for at least one more day. Now, going back to what I had kind of hinted at in the intro, one of the benefits to this move, while we don't necessarily like to see the stock market fall the way that it has, those of you that have been participating in these presentations over the weeks will know that I've bemoaned my entry on my IWM short or I shouldn't say short trade, but bearish trade. Remember, what we did was we sold a bear call spread. And interestingly enough, depending on how things shake out tomorrow, I might be bailed out for the second straight time on this. Remember, I already did a bear call spread on IWM a couple of months ago, and it immediately went against me. And then it took until that last week right before expiration for it to fall into my favor and close at a max gain. And at the beginning of the week, I was said there's no chance that's going to happen this time around. Well, here we are, 4 days into this week so far, each one of those 4 days being a down day. And our short strike on IWM is at 228. So we did a $2 wide on that one. So it's a 228 by 230. And so if it stays below 228 tomorrow, that'll be a max gain. And it looked like I was going to be sitting on a max loss just a couple of days ago. So sometimes the markets can bail you out. Sometimes it's lucky to be, or better to be lucky than good. But I am going to want to keep my eye on that one tomorrow. And remember, for those of you that are premium members, make sure you check your Telegram app. If I ever make any adjustments on these trades, I do send those out via the trade alert system that we set up for you guys. So if we have a little bit of a down day tomorrow, it'll be the second straight time that we got bailed out on our bearish Russell 2000 trade. So only time will tell. It could go either way right now. It's so close to 228 that I'm not rounding the basis on my victory lap quite yet, but we might have that opportunity tomorrow. So that's your breakdown from the 4 different major markets perspective using the market forecast. Let's now take a look at our 3 green arrows set up here. And from that perspective, we only have one index left with a 3 green arrows setup, and that is the NASDAQ Composite in our lower left-hand corner. You can see the background color of this chart is that light green color. That suggests that we have a green arrow on the 30-day moving average, a green arrow on the MACD histogram, and a green arrow on the stochastics. So remember, on Tuesday, there were others that had it. Both the S&P 500 and the Russell 2000 both had 3 green arrows 2 days ago. But since then, you know, we've had a couple of pretty sharp selling days in some cases. That has had the tendency to take a couple of those arrows away. So now we stand with the S&P 500 as kind of a mix. That's why the background color is white. So we've got a red arrow that has crept in on the MACD histogram, but we retain our green arrows on the moving average and the stochastics. And it's a little bit worse on the Russell 2000. Here we retain our green arrow on the moving average, but we have 2 red arrows now down below, MACD histogram and stochastic, both with red arrows. And then remember, the Dow Dow actually has 3 red arrows, and that was the case when I did the video for you guys on Tuesday. So that's just continues to be the case here 2 days later. So kind of an oddball market that we have right now, where we've got one index, the NASDAQ Composite, with a 3 green arrows signal, another index, the Dow Jones Industrial Average, with a 3 red arrows signal, and then the other two have a mix of them. So, it just goes to show you not all stocks trade in unison with one another. Let's go ahead and pop on over here to the internet briefly. I always like to get a chance to say thank you to those of you that help support these videos and this project that we do here called the Market Forecast, or I'm sorry, the Market Outlook, using the Market Forecast technical indicator mostly. But anyway, you guys have done a great job helping support us there on Twitter. Thank you to the 106 of you that went out of your way and took the 5 seconds to click like for us there. Remember, as long as we're getting up and over 100, I got no issues with that. We start falling below 100, then I might start changing how I go about this process. Maybe I'll just do the paragraph write-up, but I won't actually be doing the trade application example or the video. So in the end, we got to kind of work with one another. It has to be worth my time to do the video, and in order for that to occur, then you got to have a little bit of support on your end as well. And what you get is an ad-free 30-minute production from either David or myself, letting you know what our opinion and perspectives are of the market. And remember, that's just a fraction of the time that goes into producing these videos. These videos usually take somewhere between 2 and 3 hours all in order to do all the research and the editing and the recording and all that kind of stuff. So all we ask out of you, help support us. Take 5 seconds out of your day to do that, and then we'll do our best to produce good videos there for you. Hopefully give you some good trade setup ideas along the way as well, and we'll talk about that here in just a moment. Before we do, a reminder that tomorrow David will be teaching his technical analysis class at 1 p.m. Eastern Time, so make sure you check that out if you're a premium or a plus member. Earlier today, I taught my question and answer session class, and David taught his portfolio management with ETFs class, so make sure you check out those recordings if you missed that live class. Also, some of you were commenting on Twitter that, hey, one stock that's doing well today, even when the market was getting hammered this morning, is Editas Medicine. So I was happy to see that Editas was up 3% here today. Hopefully that bodes well for the future of that speculative trade that I showed you guys on Tuesday. Now, in terms of the class that I taught earlier today, remember that's kind of an Ask Me Anything format where our premium members get to pick my brain on a variety of subject matters. And so a lot of great questions, as always, were given here today. One question was on BlackRock and how to think about switching a stock from a trend trading mentality into a dividend growth mentality. I also did an analysis on Universal, which is a tobacco leaf growing company. We also had a conversation about some tools that will be available for our premium members later on this year in regards to dividend growth investing. I also got a question about analyzing Bristol-Myers Squibb. Got a question about what's the difference between yield and dividend yield on the Thinkorswim platform. Got a question about how we should think about dividend growth rates in relation to inflation rates. Got a question about analyzing Rockwell Automation, and then got a question about analyzing Boeing. So lots of good stuff there. If you're interested in that subject matter and you're a premium member, feel free to check out the recording. I've already posted it to our calendar. All right, let's go ahead and get back on track over here on the Thinkorswim platform. And I mentioned before that, we've had a pretty good run of things with the trades that we've been doing lately. And again, I think that's worth the hitting the like button for you guys that are on Twitter. Maybe I'm wrong about that, but I would venture to guess that you enjoy seeing winning trades. And we've had a very good run of things here more recently. So I thought what we could do is take a peek at where our trades are. We've got 7 trades that expire tomorrow, which is a pretty big month. Remember, I only do these videos twice a week, so I don't have as many opportunities to place trades as David does. So having 7 different trades expire on one day is actually quite a big amount for my particular perspective here. So let's go through to see where things stand with those prior trades. One of them is going to be Amgen. Remember, with that particular trade, we sold a 220 put. So yeah, it was the 220 put, expires tomorrow, so 1 day left. And as long as Amgen stays above 220, we're going to take max gain. Right now, it's sitting at 240, so unless it falls $20 per share tomorrow, that's going to be a max gain that expires worthless for us tomorrow, and those strikes will be removed from our account, and we'll keep all that credit that we received initially getting into the trade. So that one did well for us. Mark it up as a winner. Another trade that we did was Goldman Sachs. Now this one did really well for us right out of the gate, but more recently has been falling apart. Now the good news is we had so much of built-in gains in it that we could withstand this pressure that Goldman Sachs has given. And it's been pretty bad. I mean, if you look at it, I didn't really realize it was this bad, but it's actually been 8 out of the last 9 days Goldman Sachs has finished lower. Well, the good news is we gave ourselves plenty of room to be wrong. What we did in this particular trade setup was we sold the 340 put and we bought the 335 put. In other words, that's known as a bull put spread. It's a credit spread. And what you hope to occur with that type of a trade is for the stock to stay above your sold strike. In this case, our sold strike was 340. So it's another situation where unless Goldman Sachs falls $20 per share tomorrow, this is going to be another one that goes max gain for us tomorrow. The next one is one that I've mentioned briefly here already, which is IWM. And this is the biggest kind of question mark of the 7 that expire tomorrow, because it could really go either way. So I'm going to have to be kind of glued to my computer tomorrow afternoon to see if I need to manage my way out of this. But what we have with IWM is a bear call spread. In this particular trade setup, it's a credit spread where we want the stock to stay below the strike price of the sold call, right? And in this case, it's 228. So where it stands right now, if this were expiration right now, we would win this. We would go to max gain immediately. But you can see how close it is. We're at 227.29 right now. So in other words, if it were to rise even 71 cents, then we could already be a little bit in the money at that point. And remember, this is a type of trade where I don't want to go into the weekend with it expiring between the strikes, because if it does, you'll wake up on Monday morning and you might end up having a short position of IWM in your account. Remember, if it were to close above 230, which is our long strike there, then it's not quite as big of a deal. You're going to take a max loss, but you don't have to worry about waking up on Monday morning with a short position in your portfolio. It's if it closes between those two on a sold credit spread, like a bear call spread, where you have to be careful with that. So I do need to watch this one closely. If it looks like tomorrow is going to be mostly a sell-off type of a day, I could very well have the opportunity to let this one go to max gain as long as it stays below 228. If at the end of the day it looks like it's going to creep a bit above 228, then that's where I'm probably just going to have to bite the bullet and liquidate my position, and that way don't have to worry about having a short position of IWM come Monday morning. So that one is going to be very close. Right now we're in good shape, but if there's an up day in the market tomorrow, doesn't necessarily mean that it'll stay that way. The next one's also going to be somewhat of a close call, but for a different reason. This is L3 Harris. On this particular trade, it was a more speculative trade that I did. It was a long call spread. Now remember, those are bullish trades where you want the trade to go above your sold call. In this case, I did a 210 as my bought call, a 220 as my sold call. So best case scenario is that this stock trades above 220 on expiration day tomorrow. And you can see that's exactly where we're at right now. Now, the only reason I want to keep my close eye on this one is because it's not that it's going to threaten to go to a negative trade for me. I'm fairly certain that unless there's some sort of a huge disaster tomorrow, we're going to take profits on this one. With IWM, I don't know. It really is it could go either way on IWM, whether we're going to be locking in gains or losses on this one. But on LHX here, which is L3 Harris, we're most likely going to make money, right? Right now, we've made about $357 if we were to close it out right now. But it is one that I want to keep my eye on, because if it closed below 220, it's possible that I would end up having some other obligations from the marketplace. So I will probably end up closing this down if it appears to me that it's going to be closing below 220 tomorrow. And right now we're at 220.38. So I will likely take a gain on this one. It's just a matter of how much of a gain. If it stays above 220, then I don't really need to do anything, because then they're both going to close in the money. The broker will remove them from your account over the weekend, and you will have a max gain situation. So in a way, I'm kind of hoping for a perfectly calm market tomorrow, where my IWM stays below 228 and my LHX stays above 220 and just balances things out there. So we'll see how that goes, but both of those two, be on the lookout for my Telegram messages tomorrow as to whether I'll be taking any action on them. The next one that we have is Philip Morris. This one I believe was a sold put. Yeah, so this is an 87.50 sold put that we did here. In other words, we want it to stay above 87.50. 87.50 is way down here. Remember, we did this one in the face of fear. There were a lot of people that hated the tobacco companies for a brief moment in time because there was some regulatory threats like taking away menthol and some of these different things that were going on, and the tobacco stocks really sold off. We took advantage of everybody else's fear. This one worked out brilliantly for us out of the gate. So got no problems with this one. This one's going to be expiring worthless tomorrow, and we will capture maximum gain on PM. Next trade is TLT. Remember, TLT is the long bond trade, and this was a bullish trade. In this case, we sold the 134 put, we bought the 133 put. So this is a bull put spread. We want the security to stay above the sold strike of 134. We're not going to have any problem with that whatsoever. 134 is way down here. So obviously this one worked out very nicely. There was one moment in time right here where I was starting to sweat it a little bit as it was trading below the moving average. But in general, this has worked out just great. And remember, there were a lot of people that did not believe that bonds could go higher in this environment, because back here they were really below a falling moving average. We took a little bit of a leap of faith that things were going to settle down for a bit, and that's exactly what happened, and we're going to benefit from that decision that we made. And then I think we had, was it one more? Yeah, it was Viacom was our other one that we'll have expiring tomorrow. Now, Viacom hasn't really gone anywhere, but because of the choice of trade that we did, that's perfectly fine. This is another one where we did a bull put spread. Our sold strike was 38, our bought strike was 37, and so as long as it stays above 38 tomorrow, this one is another one that will go to maximum gain. Now you can see Viacom hasn't really gone anywhere. It's kind of just hugged this 30-day moving average here for the last several days, but we didn't need it to go anywhere. They do call it a bull put spread, so there is a little bit more of an element of bullishness than bearishness, but remember, on those spreads, if you're selling out of the money strikes like we do, even a stock going sideways can make you money. In fact, it's a good educational example where some of you that only do stock trades, you might be giving up some ability to make money when stocks don't do anything, right? Like in this case, where if somebody would have bought Viacom, the stock, they might be sitting on exactly 0 gains and 0 losses, whereas what we chose to do was sell a bull put spread, and even a sideways stock is going to end up making us money because we make money off of time decay. So anyway, all 7 of those trades are going to expire tomorrow, and with the exception of IWM, which right now is kind of a crapshoot, we don't know either way, we're going to have a lot of winners tomorrow. So if you guys appreciate all of these trade examples that we look for you, and myself and David included as well, we try to find good trade setups for you, right? That takes an effort. We ask one thing out of you: support the video, help us along on social media. I would hate to have a situation where all of these types of trades just disappear one day and we don't do them anymore because you guys decide you didn't want to help us along on social media. And that's only a small portion of you. We know many of you help us along tons, and we would encourage you to continue to do that. So thank you very much. It's been a wonderful month of trades here with these presentations, and you guys have done a fantastic job supporting the videos. Let's go ahead and take a look at some 12 grid analysis here, because I wanted to show you what was going on with the US dollar in particular. I'd mentioned that a couple of times in the video already. Take a look at this 2-day move in the US dollar here. I certainly was not expecting this on Tuesday when I did the video. It's not that I wasn't expecting it to go up. I just wasn't expecting it to go up at this rate. I mean, these are gigantic moves here in the U.S. dollar. And of course, it's not a coincidence that that happened after the Federal Reserve meeting here yesterday. So, it is a reminder that when there's a Federal Reserve meeting, you're expecting chaotic markets, particularly in the more macro-oriented areas. And so the U.S. dollar, when it rises, it tends to have a negative impact on commodities. Look at what has happened to gold the last couple of days. Yikes. I'm really glad I didn't press myself to place a trade. If somebody would have put a gun to my head a couple of days ago and said, you have to take a trade on gold, is it going to be bullish or bearish? I think I would have gone bullish. So thank goodness nobody applied that pressure. And it's a good thing we didn't take any bullish trades on gold, because this thing is absolutely just falling out of bed. Now it looks a lot worse. All of a sudden, you now have a red moving average. And so all else being equal, path of least resistance is starting to look like to the downside. Now, I don't know if it's going to cross below this true low that we had back here in late March, but you might find that gold just finds itself kind of going sideways here for a while, where it doesn't break down below that low, or it doesn't break down above that high. We might be stuck in no man's land in the middle for quite some time there. So that really strong dollar has caused major pressure on gold. You can also see that it's pressured oil. Oil has been down the last couple of days, not nearly as much, but oil did have a pretty big give back here today of 1.46%. The difference between the two charts is pretty stark. You can see that oil continues to have a strongly bullish posture. Their intermediate line is at 92, so it's still above 80. Therefore, we still consider it strongly bullish, whereas gold has fallen down to the 51 percentile. If it were to fall just a little bit more, so in other words, if gold were to fall again tomorrow, you'd probably be looking at gold with a dark pink background, strongly bearish posture. This was a really ugly day for gold, down 3%. Ouch. And then you can see also what happened here that caused some impact on a lot of markets. The U.S. Treasury yield had a big drop here today. It ended at 1.51%. Remember, there's a lot of interest rate sensitive assets out there that will react to that. And we'll talk about that here in just a second when we get on over to the sector analysis. But of course, when interest rates fall, like they did pretty strongly here today, that means the opposite. TLT and bonds tend to go up. And of course, that's going to benefit us with our trade that expires tomorrow. Then we'll have to consider new macro trades for the month to come in front of us here as we go through the summer. As far as the foreign markets globally, remember, when the U.S. dollar goes up, all else being equal, it could mean that foreign securities do worse than U.S. securities. We did see that in the case of the developed foreign stocks. They were down 0.69%, quite a bit worse than the flat performance in the United States. But EEM was actually up today. Now, part of that might be because EEM has already suffered a lot more in the last couple of weeks compared to EFA. So maybe it was just, a little bit of a chance to take a breath for the short sellers there in EEM. But that was a little bit peculiar there that they were up and doing better than the U.S. dollar on a day when doing better than U.S. stocks on the day when the U.S. dollar was surging higher. Let's take a look at the sectors now. And from a sector perspective, you did see a lot of the interest rate sensitive areas making moves. And so notice down below here, we had a clean sweep on our bottom rung of green, not green in terms of posture, but green in terms of today's performance. You had healthcare that was up 0.76% today. So again, Editas being one example there of some of those more speculative healthcare stocks that did well today. Staples were up today. They were up 0.36%. Utilities were up 0.55%, and real estate was up 0.38%. Remember that bottom rung is a more defensive grouping in general. They come with higher dividend yields in general than some of these other areas, and therefore they have more interest rate sensitivity. And when interest rates fall like they did today, then all else being equal, you'll have a little bit of buying support in some of those areas, whereas the opposite can be true for financials. And my oh my, was that the case today. Financials got absolutely torpedoed today. Financials were down nearly 3%. And you can see how ugly that candle is right there. Not not only were they down a tremendous amount, but the moving average changed to red all of a sudden here as well. And remember, that was already the case on materials. We talked about that on Tuesday, and also here with industrial. So the bleeding has gotten worse in those two areas and is now dragging the financials down with it. And a lot of that is because of the macro conditions I mentioned a moment ago, with what's happening with inflation expectations and interest rates and things like that. One other thing I would point out is that technology is looking very strong all of a sudden again. Technology was actually the leader today, all things considered. It was up 1.16%. Now, remember what we were talking about earlier in the year when it comes to interest rates and growth stocks. Typically, when interest rates fall, that is supportive of growth stocks in general because of how the cash flows from the future are discounted back to today. When interest rates rise, that kind of puts the lid on their value today. So we saw a period of time here where the technology really fell out of bed right over here, and that was during a time when interest rates were rising. Now that we saw interest rates falling here more recently, you can see that technology is working its way out of its funk and on the cusp of breaking out to the upside. We also saw communications do pretty well here today, up 0.42%. They have a strongly bullish posture, and that leads us into our trade application example for today because the stock that I selected was a communications stock. The stock is going to be quite a speculative one because it's only a $5 stock, and that stock is TrueCar. Now, I don't know much about this company, admittedly, but if you were to come over here, you go over to Analyze and Fundamentals, you can see that it's a communication services company. You can read a little bit more about it. It's kind of a software that car dealerships and other things will use. But the reason that it caught my eye here today is because we're at kind of a turning point of sorts. Now, we don't really know what direction it's going to break yet, so it's a little bit more speculative from that perspective. But one thing that caught my eye with this one is that we are starting to see a bit of a bullish near-term divergence play out. Notice down below here, you had this low in the near-term line, a slightly higher low in the near-term line, and then another slightly higher low in the near-term line. So you had kind of, 2 or 3 higher lows and also higher highs that were associated with that blue near-term line down below. Now, during that process, when that was kind of etching out those divergences, or those higher lows, I should say, you can see that the price action up above was going lower pretty much that entire time, right? This was the final one right here. So this last higher low was right here. That was associated with this candle. And you can see that all those prior candles were higher than this candle. In other words, prices were going down nearly every day when the underlying indicator was improving nearly every day. Now you're kind of at the midpoint of the market forecast where you've got the green line that's still traveling down a little bit, but the blue line that's surging higher, and they're both meeting right there trying to determine who's going to win this out. Is it going to be the trend traders or the swing traders? Why this one is also interesting to me is where it's bouncing from. Not only is it coming down and it looks like it's bouncing up and away from that rising 30-day moving average, but you'll also notice that from a horizontal perspective, notice that where it bounced yesterday at its low, if you were to look at the crosshairs to the left of my mouse, you can see that it goes right across this candle over here and this candle over here. In other words, the high on this candle was 518. The high on this candle was also 518, and then the low on yesterday's candle was 516. In other words, it went right down to those prior resistance areas, and there is a theory in technical analysis that suggests old resistance becomes new support. So we're hoping that it's going to start catching a bounce to the upside. We now know we have a bullish near-term posture. That's what that blue background color is telling us on this chart 3A, and we know that we're still above a rising moving average. So I'm just doing a simple bullish swing trade using stock on this, and you can kind of see the levels that I've selected here where I'm putting my stop loss a little bit below 5 and putting our upside price target up here just above 550. So we'll see if that works out for us, and we'll see where this market takes us tomorrow into our options expiration day as well. So hope you enjoyed tonight's presentation, whether it was getting an understanding as to what's going on with the US dollar and some of the reverberations of that big move that we've seen there, or whether it's the interest rate sensitivity and how it's playing its way through the various sectors, or if you just like to see how things are going with the prior trades that we've placed here in my videos for you over the last couple of months, and how we're going to find a lot of success tomorrow in this month's expiration. Regardless of why you like the video, just let me know that you like the video by clicking like for me there on Twitter. All right, now the last thing I'll say is Happy Father's Day. I know we've got a lot of fathers in our audience. Hope you would kick back and enjoy yourself this weekend. Maybe throw a steak on the grill. Maybe have the kids over and take good care of you, right? And we'll be back in action here. I'll be back next week. David should be back with you here tomorrow. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.